We are quickly going live. We're just going to give you a quick recap as to what Christine Lagarde, Jerome Powell have been talking about around cryptocurrencies. But what I'm going to do is we'll give you a recap, maybe in about 5 minutes, but I want you to see what it is that they are talking about, and we can have a look right here. So I'm going to let you listen in. What do you think?
Hello.
No. What I will do, guys, we're just going to take a quick stop here. Obviously, this is still going ahead. I'm actually going to pause this so we can hear Jerome Powell talk about CBDC. Just a quick overview as to what we've had so far, guys. I've been, looking at it, having a look at some of the notes. Christine Lagarde has been talking about. There's kind of three points of concern. One is that people are searching for yield, obviously bonds are not really attractive. The yields have gone up, but ultimately, if you're trying to get yield, but inflation is crazy high and your yield is less, then there's no point. So people have been searching for yield, and that needs regulation. Also, people are worried about the likes of Do Kwon and stable coins because stable coins have been crazy, and obviously that is part of the yield conversation because they offer yield, but also people like Do Kwon have lost people millions of dollars, and usually you go to jail if that happens, but that hasn't happened. So, well, not yet because he's on the run, and these guys don't like that. So we're going to hear Jerome Powell talk about those stable coins, and also I get the feeling that these guys obviously don't like the lack of control that they would have over the whole ecosystem, but also they just don't like this cultural revolution. They said it was started by the libertarian type people, all these tree huggers and everyone who wants to get away from the government. So that's obviously an area of concern because they control pretty much every aspect of our life. Now, if we move away from them and we have our own money, then we don't need the people who are the president of central banks. Like these are the most important money men on the planet, and women, and everything in between. But yeah, this is obviously a massive concern for the likes of these three here. Um, and also they've called it just extremely speculative and haven't really alluded to any blockchain technology, just said, hey, crypto assets are very, very speculative and pretty much serve no purpose, which is wrong because they obviously don't understand the tech behind it. AJ, was there anything you wanted to chip in here in addition, just before we get into Jerome Powell talking about these stable coins?
Not really. Just we're seeing that the crypto market is having that nice bounce, and maybe it is sort of to be expected because we have actually formed this higher high on the DXY. Potentially on the DXY, we're going to form another higher low. Once we form that higher low, then we could see the DXY push even further. So whilst we form that higher low, I think we could see Bitcoin continue to push a little bit more. But then once we continue up on the DXY to make that higher high, I do think that's when Bitcoin will have that crash towards the downside. So I think right now we are going to have a bit of a push towards the upside because the DXY is most likely going to come down and form some sort of higher low.
Yeah, dropping from the DXY, dropping from that 114 into the middle of the 113s. And obviously, Bitcoin had about a 6% gain yesterday. So I'm
Yeah.
just going to play this here. If there we go. There we go.
Need to whack the sound on.
Hmm?
Can you hear it? I think the sound needs
I
to
can
be.
hear it. Can you?
No, we can't hear it. I don't know. Let us know in the comments if you can hear it.
Yeah, drop a comment down below if you can hear it or not.
I'll go and
Yeah,
check it.
drop a comment down below if you can hear it or not. Does this help? Yeah, drop a comment down below if you can hear it or not. Does this help?
No sound. There is no sound.
Disaster. Uh, damn, damn. Okay, so okay. In that case, then, so what he's saying is, they're beginning to develop their own CBDCs. So the Fed, they're looking at kind of Fed now. I'll bring this up just as a. Oh, you can't do closed captions. Okay, so well, look, what I will do is I'll just quickly go through a little bit of news as to what's going on today, and then we can recap with Jerome Powell at the end. To be honest, there hasn't been much on Bloomberg. I'll paused it here just because we have seen a nice little push. We can see the kind of the main, so this is Ethereum Classic proof of work, Bitcoin Cash, XRP, Litecoin, Ethereum, and Bitcoin. And you obviously you'll see that these are often looked at a little bit more because of the big institutional exposure they get. Bloomberg haven't really mentioned anything. Overall, the general markets are up a little bit on the day as well, but volatility is massively up in the traditional markets. But it's kind of earnings season, so that's what's getting a bit of traction there. Goldman and BlackRock, bear in mind, BlackRock, if you remember, they are the largest asset manager in the world. I believe it was like, what, 10, 11 trillion or so, AJ? Do you remember? How
I
much
can't
they manage?
can't remember
Yeah.
what was that? What was it? Black.
BlackRock. So BlackRock, I believe it's around. It was 9 million last year, and I believe it's shot up to about 10 now. But
Yeah.
anyway, largest asset manager. They manage like $10 trillion, but they're sour on stocks as recession risk rises. So this little pump that we're having, I would say be careful because it's not necessarily hey everything's good because we've just hit a bottom. Even though we have bounced off a very key level, which AJ, I'm sure you're going to obviously show that later. And so yeah, so we are still in this massive sell-off. We are going to have bounces, in between this range, but obviously this is just the general, and this is not specific to crypto. And then five things we talked about: the UK pound, that basically just dumped extremely hard, but it is on the way up. Recession odds, if you follow us on Twitter, 98% chance of a looming global recession, which is absolutely insane from the Ned Davis research. Which, yeah, I mean, look, that's 98% of a looming global recession. Last time it was this high, we actually had a recession. So that's one thing to kind of keep in mind. Obviously, the dollar continued to rally. Stocks have kind of begin to cover, but yeah, we see this here this week later. This week's busy slate for Fed speakers continues with Jerome Powell, as well as Charles Evans and Jane Boulevard at today's events. And then we have, like I mentioned yesterday, a ton of news coming out later on this week, which, if you haven't seen, watch the video previously. But yeah, Bitcoin has retaken that 20K level. I don't know exactly where we are. And I will, well, actually, do you know what? Do you want to just give us an update as to where we are, AJ, in the Bitcoin price?
Yeah, so the current price is $20,300, and we are seeing a little push towards the upside right now, as Jerome Powell, I'm sure, is speaking right now. So we are having that little push towards the upside. But what are the levels that we are looking at? Well, the levels that we are looking at that Okay. The levels are approximately that's $18,900 level and the 19,000 sort of $700 level. That is sort of the major support level that we are sat at right now, and we are actually getting a slight bounce off of that. We've tested this level a lot. We've tested this level back in June. We've tested this level back in August. And it is a very major support level, as we know, because it is the previous high from back in 2017, this approximate level. So we are finding nice support off it, and it is going to be quite hard for us to break below this, because it is a major support level. But as I said at the start, the DXY is in a massive uptrend. I mentioned this in previous videos, and we are forming this. If I just show you quickly, we are in a very clear uptrend. So say we start from here, we have the high, we have a low, we have the higher high, higher low, higher high, higher low, higher high, higher low, and we've established a new higher high at approximately $114. So the DXY is very inverse to what the DXY and Bitcoin, they're very inverse. So when the DXY is going up, we see Bitcoin come down. So the DXY has established a local top at approximately $114.50 approximately, and we are seeing it have a little retracement from there. Now, this is to be expected within an uptrend. We are expecting to see a pullback and form a potential lower low. So the previous lower low was at 107.7. So we now are expecting to form another lower low, at least above that level. If we do break that previous lower low, then there is a potential that we could see a reversal. But right now, it doesn't look like we are going to see that. So for me, I do think we could see another another higher low on the DXY. Now, whilst the DXY is forming that higher low, we are going to see the DXY come down. And that's what we are seeing right now. And the likelihood of it is, when that happens, we are most likely going to see the traditional market and the crypto market have a little push towards the upside whilst the DXY comes down. Because as we know, when the DXY goes up, Bitcoin and the traditional market comes down. And it does help that Bitcoin is at support, and it does help that the traditional market is at support. So if we're looking at the S&P 500, we're currently sat at $3,707, and there is support coming in. We can sort of put this range at between 3,640 and 3,680 approximately. We do have a nice support zone there, as you can see from back here as well. This level has been a major support level between that 3,640 and $3,680 level. So it does help that we are at support, but because we are seeing this DXY have a little pullback from this local top that it has established, we are most likely going to see in the shorter term the traditional market and the crypto markets have that little push towards the upside. Now, where could Bitcoin come up to? So first of all, if we're looking at this 12-hour chart, I have taken a fib retracement from this high here back on the 13th of September. The high was at $22,700 to these two lows here at the approximate date of the, where was it? So the 19th of September and the 21st of September. The price was $18,070 approximately. So I've taken the fib from that high to that low, and we do have a golden pocket sat at around $21,000 approximately. So there is going to be a bit of resistance there at approximately 21,000. And then if we have a look at this chart here, we can see that we do have this downwards trending resistance level. So it's been major resistance on the 31st of May. It's been major resistance on the 15th of August, and major resistance on the 12th and the 13th of September. And we can see each time we have been rejected from this downwards trending resistance, and it will come into play at just under $21,000. So this is the bigger time frame. So we can expect a wick to maybe that $21,000 level on the 12-hour time frame, and then the daily will potentially still get a rejection from this resistance. But initially, we are coming into or getting close to that resistance level. So this next resistance level is going to be this diagonal line at approximately $20,700. That's where the next resistance I am looking at coming in. And then if we do break above that, then there is the possibility that we could come up to the next resistance level, which is sat at around $21,400. So we do have a lot of resistance above us, and we are coming into those resistance levels. Again, the golden pocket, 21,000, that's going to be resistance as well. So we could potentially, because there's a lot of resistance around that level, we could potentially get a rejection from that level there at sort of the vicinity of $20,700 and $21,200 potentially. There's a lot of resistance there. And maybe whilst we do come up to there, we could see the DXY form that higher low, and then we could see the continuation towards the upside for the DXY, which would potentially push, most likely push the traditional market and the crypto market down back to those support levels. Or we could break above these resistance levels, and we could see maybe the price have another little push towards the upside, and maybe the DXY has a bit more of a bigger correction, still having that higher low though. So we do just have to wait and see if we can break above these resistance levels. But right now, it looks like we are most likely going to come to the approximate resistance level at around $20,700, $20,800. That's where I'll be looking for the price to come to next. Whilst that DXY is having that little correction, hopefully, well, I say hopefully, but potentially forming that higher low, and then the DXY can continue towards the upside. Right now, I just don't see any signs that are telling me that the DXY is going to stop anytime soon, fundamentally and technically as well. We do have a very long way down. So we're currently sat at just under $114. And for me to sort of have the scenario in my head that we could have already topped out on the DXY, we would have to break $107.7 on the DXY approximately. So there is a pretty big gap that we would have to get rid of all of this space here. We would have to get down to 107.7 to sort of confirm that we are potentially going to form some sort of downtrend now. But right now, we are looking very, very bullish on the DXY, which is obviously very, very bearish for traditional and the crypto market.
Yeah, no, you're absolutely right there. You are absolutely right. It does look pretty bad, doesn't it, on the way forward?
It does, yeah. And
yeah,
just forming a higher high is not good, and the price coming down and potentially having that opportunity to form a higher low is not very good at all. Because if we do form this higher low, we're most likely going to come up and form another higher high and continue this push towards the upside on the DXY.
Okay, well, what I will do now, let me know if this works here.
Said for the deflation of the crypto world, but had to do a lot with the quasi Ponzi scheme that was going on because of lack of regulation and abuse of figures like repos. So I think we need to have that nimbleness to do all this. Now, in terms of CBDCs, I think what Jay and Christine has said is precise. I don't have much to add, but I would build a little bit more in the direction of where Ravi was going, and that is, I think CBDC can really become programmable and can facilitate the incorporation into more traditional type of transactions of many of the ideas behind DeFi, like programmability and so on and so forth. So I think that the nimbleness that, for example, stable coins bring to the table should be provided by CBDC. And, as a matter of fact, this shouldn't be that difficult.
Guys, I'm just going to give you a quick recap as to what they've mentioned previously, what Jerome Powell mentioned, so you know what this guy's talking about. He just basically said that with DeFi, there's a lot of risks, especially with like smart contracts and stuff. I think it's because it's not owned by anybody. The reason why everyone has lawyers and things like this, is because they're a trusted third party and people like that. But obviously, we don't, because we like to take ownership over things. But the people who own stuff don't want you to own anything. But they also mentioned about how crypto is used to evade sanctions, and I think this is just one big theme that we're seeing run across here. Let's take all of these guys on the same side. Obviously, they're not. But Europe and US, let's say they're on the same side, versus China, for example. Let's say China creates a money or has control over a money. How does the US regulate that? The US regulates activity within its own, within companies on the NASDAQ or companies in the S&P 500, for example. And they regulate them because, you're started in our country, you operate within our country, you stick by our laws, and they can act differently in different countries, such as they don't get taxed if they have a base in, I don't know, UAE or Dublin, for example. So there's different things that you can do, globally, but because there's no governing body to Bitcoin or crypto, it makes it really hard for them to, one, offer protection to anybody who gets scammed, like Dokon, for example, when he comes along, does another one. And so this is one thing that they, take into account. And I know they say it's in the mind of, protection. I think it's with the gaze of control over it. And also Jerome Powell said that the efficiency of the blockchain and of smart contracts is pretty much superficial because you have a lot of risks that come with it. So basically what he is saying is that as crypto heads, we have taken efficiency and we have taken what should we say, I guess, relative ease of use, but we've included more risks into this. And so this is why he doesn't like it as much. And also, the main thing is that stablecoin needs to be backed because, we're going to have this mixing of stablecoins. Sorry, they need to be, yes, actually fully backed. One of the points he made was, sometimes USDT, people say that they're backed, but they haven't been fully audited, etc. And so central banks, they are, basically just a center of trust, which I can see. They absolutely are for now. So that does make sense. And the Fed needs to have a role in private money internationally, So the Fed can have a role in, let's say, Facebook and their operations overseas. But at the end of the day, imagine if you have, I don't know, let's say if Bitcoin is Chinese, that's then going to be really scary for some kind of infiltration into the US, whether it's network or if there's a smart contract platform that gets overtaken by Chinese private money, for example, and then they can use that to their advantage and kind of understand what's going on in the US market to do some kind of war or whatever it is that people might want to do, but they're looking at this in a malicious type of way, and that's why the Fed are scared. So I just wanted to bring that up for you very quickly. Drop us a comment if you have any questions as well, by the way.
What does stablecoin mean? Stablecoin means it's a digital asset that doesn't have value in itself, and it has to import its value from trusted money issued by central banks. So, but if we have already trusted money, why do we need to export that value to another currency? Well, let's just present that money with the adequate technological representation that would allow for innovation and evolution of the payment systems and the financial system in the way it is being pursued through DeFi.
And Agustin, I push the question on wholesale versus retail CBDC. If I was to be provocative, I would say that the BIS Innovation Hub, to my knowledge, is mainly focused on wholesale CBDC. Do you believe in retail CBDC? Yes or no?
I think it's a public choice. I think my basic point is it needs to prove its value. But one thing that we as central banks, bankers, at least that's my opinion, personal opinion, cannot afford is if the public wants a central bank issued money for retail, we should be ready to provide it. I mean, if the society demands that, we should be able to provide it. I think we should do the work If people do not want it, well, that's fine. But if people really want it, I think it behooves us to be ready.
Thank you.
I agree with that,
We
actually.
come back to Singapore. Sorry for this technical problem we have. By the way, I turn to the organizers. We will perhaps have 3 to 5 minutes at the end from 1 or 2 questions from the audience. So we will see if it's possible, but if you have questions, don't hesitate. Ravi, you are back.
Thanks, Francois. I'll just pick up from where Augustine left off. I'm a bigger fan of wholesale CBDCs than retail CBDCs. As I said earlier, the critical problems we're trying to solve can be solved by programmable money in the form of private stablecoins, tokenized deposits, or wholesale CBDCs. And I think the future landscape will have all three in play. And I think that's not a bad landscape, provided we can regulate stablecoins well. And the other two, will follow suit. Retail CBDCs, I think, is a public choice. It's not required to solve any specific problem that the kind we're discussing, whether it's trade finance, cross-border payment settlement, post and pre-trade capital market activities. You don't need retail CBDCs for that. Wholesale CBDCs, stable coins, and tokenized deposits do it. So retail CBDCs is a separate choice. I think it's a political economy choice and a public choice. A quick word on stablecoin regulation, which I think is where the crux of our focus ought to be. And Jay has highlighted the things that we're doing at the international community level. I think there are three issues we need to pay close attention. Jurisdictional differences in stablecoin regulation, I think, can be very challenging. The thing is this, the same stablecoin can be issued by several entities across multiple jurisdictions. So the same coin issued in the US and issued in Singapore could be subject to different standards. And this is not, and so we do need regulatory alignment, and this is something the international community is focused on. Then there are the decentralized governance issues with stablecoins that rely on algorithms. This is a huge problem. And we discussed that earlier on. And then third, there is systemic risks. Now, we say that stablecoins are backed by low-risk assets. Now, if they're fully backed by low-risk, high-quality assets, they can pose concentration risks. In times of stress, multiple stablecoin issuers can concurrently suffer from mass redemptions, leading to a fire sale of underlying financial assets, because these are a limited class of financial assets which we regulators deem as low risk and high quality. So I think this is one risk we need to look at. So, but these are solvable problems, unlike the DeFi problems, which are almost conceptually difficult at this point in terms of regulatory technology to try to solve. Stop here. Thanks.
Thank you very much. I just check whether Christine or Jay would want to have a short reaction to what Agustin or Ravi said. Up to you. No? Up to you. Okay. Then if we can have a light on the audience and see whether there are some questions. I said for our free online panelists, we have a wonderful audience in Le Louvre, about 400 participants, but I'm just checking.
What question would you guys ask? If you had a question to ask these panelists, what would you say?
Apparently there is one question, but do you have a mic?
Why are you mugging off my friend Crypto?
Here? It will come. If you just are ready to introduce yourself and put your question briefly, thank you very much.
Bonjour, David Durouchou, Société Générale Forge. My question is related to the anonymity of the coins that we are dealing with. Cryptocurrency are bearing a lot of anonymity, and probably it is the reason why a lot of people are using them. Would CBDC bear the same anonymity, and how do you manage it in the future?
Yeah, this is one thing. I think this is what China's doing.
I hope the question was clear for everybody. By the way, you use the word cryptocurrencies, which was the best way to stimulate the 5 central bankers who are here. I don't know who would jump on the question and. Okay.
Sure. I'll just say briefly, Francois, that we haven't made, as you know, decisions to proceed or not, but we issued a discussion paper in January of this year, and we said that we think that there are 4 characteristics of, if we were to pursue a CBDC, it would have the following 4 characteristics. First is immediate. Second is privacy protected. Third is identity verified. So it would not be anonymous. It would not be an anonymous bearer instrument. And fourth is transferable or interoperable. So we would be looking to balance privacy protection with identity verification, which has to be done, of course, in today's traditional system as well.
Thank you very much for this answer. Christine, sorry, you raised your hand. I didn't see it. Please.
Very briefly, François. 2 things. One is when we surveyed Europeans, in addition to the support to the digital euro, was privacy. Privacy is first and foremost on their mind when we developed the digital euro. In terms of anonymity, would not be complete anonymity as there is with notes, for instance. Level of disclosure, and certainly not at the central bank level.
That sounds sketchy. That's basically, we're still going to know.
Nothing to add.
I don't know what you make of that, AJ.
So, stop there to be on time. May I thank warmly our 4 panelists, because I hope this appreciation was shared with the audience, but it was really a higher level conversation and very.
Well, there you go, guys. I mean, I think realistically, from what I heard there, AJ, we're kind of just looking at a scenario where there wouldn't be that level of anonymity, which obviously, you know, with the likes of Tornado Cash, that got shut down by the, was it the SEC? Or whoever it was, the federal, you know, someone in the US, basically, one of these, you know, one of the big boys. That was because it promoted anonymity, and I think, you know, the government don't trust you inherently. So if you have the ability to control your own money, they're obviously not going to be a fan of that. And I think that's kind of the main takeaway.
Yeah, definitely. If they lose control, it's all over for them, isn't it?
Yeah, exactly. Like, I mean, I'm gonna just have a quick look at. Oh my, hello, boy. Look at this. Let me just quickly show you something. Bring us up here. So I actually hadn't looked at this. So you know everyone's worried about BRICS, which is basically Brazil. So Russia, Brazil, Russia, India, China, and South Africa. They're all coming together to create an alternative currency because they're pretty much just kind of fed up with the way the US is doing things. Obviously, these guys are lean a little bit more to the communist side, you know, obviously Russia and China. But anyway, so you know, all these other countries have kind of jumped on board with Russia and China, but I didn't see this. Russia aims to use CBDC for international settlements with China. Now, Russia has stated that they're obviously very much into making their own CBDC. Whether this will be pretty much a copy and paste of China's, I don't know. But yeah, this is what these guys are worried about. You know, using cryptocurrencies, and I will say, guys, this is just a central bank digital currency. It's basically like just a digital note. You know how, like, you check your bank account, you don't actually have that much cash. You might have that much cash, but it's not in a vault. It's just a number on your screen. So that's exactly the same as what a CBDC type would look like. But there is worries about security. And the programmability. So one thing that people are worried about, and I can't find it here because obviously I've only just kind of thought about it off the top of my head, is that people are actually going to be very much so looking at, okay, well, if I print, as a central bank, if I issue currency, I can say, hey, this is actually only going to be valid for the next half an hour or the next 30 days, or hey, you have to spend this money in this specific location. So if there's, I don't know, the Olympics going on in your country, you could give everybody a little bit of stimulus so they have to turn up. Well, they don't have to, but they lose the money. So it's very much controlling where people go and manipulating what they do with their money based upon how long you give it to them for. Is it only active for 30 days? So therefore you have to, push the economy in the right direction, for example, by not saving because the money's going to evaporate after 30 days. So there's loads of different things that you can do, but then also track. So you can track exactly where people are spending what. And so as a level of control, having a CBDC, which is not anonymous, gives them an exact idea what you're doing with your cash, where, what type of person you are. Are you buying, I don't know, some beers at the weekend? Are you buying, drugs, or are you buying fast cars? Or you could do, obviously people do good stuff. But this is where the whole Chinese social score comes in, because, crypto is great, but because everything's on a blockchain, if someone knows your wallet addresses, they can see exactly what you're doing. You leave a breadcrumb every time you interact. So this could be an issue. We're seeing it in China, and I think we'll see it expand in the US and Europe, where people will essentially have the ability to, if they issue you currency, from the central bank, such as, let's say, a stimmy check, so everyone gets a stimulus, they will know exactly what you've done with that, when you've done it, and then they can create a profile about how good or bad of a person you are. And then they could just, let's say, add it to your credit score, and you thought you were fine because you bought, I don't know, a round of beer on a Monday night, but they say that's not good for society, so they can kind of manipulate you that way. But yeah, there are definitely a lot of security concerns that obviously these guys, they don't want to admit how I guess how much control they want to keep. Seems that way anyway.
Yeah, I think the simplest thing that they could do, and probably the obvious thing that they would do, is maybe make it legal for all exchanges in whatever country they're in, to make it a legal requirement for exchanges to have KYC, because I know that's not a legal requirement at the moment in a lot of countries. I'm not sure. I feel like America, you might have to have KYC. Is that right?
I'm not sure exactly. I think it would probably change as per, but I know for Bybit, for example, they're a little bit more lenient. Is that right?
Yeah.
In certain
I know they're a
countries.
bit stricter with Binance, but I would think that the first thing that they would do is make it a legal requirement for all exchanges to have KYC, and the government to have the ability to have all of that information as well. And that would be probably the easiest way that they could see what everyone is spending their money on. But then it's the case of sort of, they're going to have to build a team around monitoring that as well. Obviously, computers are probably pretty advanced now, so they could probably have a computer that is literally the team that goes around it. But yeah, KYC is probably, for me, the obvious route that they would go down, to make it a legal requirement for exchanges, and for the exchanges to give them that information as well.
But one thing that would be good is I don't live in the US and I don't have to do a tax return, I guess you kind of do. You do have to reclaim your taxes if you have a business or anything elsewhere. But one thing that I guess could be fantastic about the CBDC, how Americans, and like I said, I'm not American, but from what I've heard from my American friends, it's a right pain in the ass to try and go and do all your taxes. And they know how much you owe them, but they're not going to tell you. They're just going to wait for you to report it. And if you report it wrong, then you have to pay them. And then, but then you also have to go through all the effort to actually report it, correctly. So that maybe would eliminate that. but obviously that's just in one country. So I think a CBDC overall, it's really, really good for control, but they're going to scare everybody. And just as Joshua said, as someone who depends on a disability check from the government, you just scared the hell out of me, because anyone who receives any money from the government, whether it's a stimulus check, whether it's, for any type of disability payment, or even you're just a government employee at all, even people who are on, benefits, for example, getting government benefits for childcare or healthcare or anything, that could all be tracked. And I think that would lead to, it's one of those, what is it, someone tell me in the comments, George Orwell, 1988, or is it, what's it called? It's annoying me now. Was it George Orwell? It's the dystopian 1984. That's what it's called. It's a book. But yeah, it just does kind of lead to that. There you go. Thank you, Christy. It does lead to that kind of that dystopia type, era where there's so much control that, they have a massive opportunity. We like Bitcoin. We like blockchain technology. The central banks have the opportunity here to implement something that could really, really give them a lot of control over us, which obviously, I'm not going to lie, that's probably what they want. But if they do it in the worst way, I think it could blow up in their face and everyone would just be like, actually, you know what? We're just going to use cash, and use it could go back to just using crypto for, what it was used for before, which is like illicit stuff. But I think one thing also, I don't feel like AJ they fully grasped the potential for the blockchain technology itself. They've just been calling them crypto assets, saying they're speculative. They avoid tax, they avoid everything else. But it's like
they look at it all in a very bad way, and they look at it as just another sort of investment asset, risky asset,
like a tax dodge.
There you go. Yeah, but I don't think they see the real sort of meaning behind it and what it can be in the future.
No, exactly. Yeah, you're right. And I mean, look, guys, I think it's going to take quite a long time for this adoption to kick in. But you have to consider, the people who are currently making all of the money that blockchain would potentially replace. Let's say, for example, like lawyers, for example, who make contracts. All of these different things. There are so many different elements to which blockchain can just completely disrupt. Logistics. It can disrupt so many different areas of the world that these guys are paying the likes of central bankers. They call it lobbying, but it's basically just bribery that happens everywhere, in every government, everywhere. So obviously, if you've received loads of money and got into your position of power by getting favors from, people who are very high up or big companies, you're unlikely to, as soon as you get in your position, just say, oh, actually, yeah, let's do blockchain. And that will then eliminate a load of different, potential people, put them out of business when they're the ones who've got you into power. So I think that will probably be a little bit of an element. And so might take a while to kick in.
It's a very difficult subject, and especially with crypto still being very, very early in the early stages as well. It is going to take a lot of time to come up with any sort of regulation as well.
Yeah, there you go. But guys, I'm going to leave you with a nice little bit of news. AJ, is there anything else you want to jump onto? While we're here.
Let's have a quick look.
Let's have a quick look at Bitcoin. Has anything really happened since the end of their panel discussion?
That's what I was going to mention. Nothing much. A little push towards the upside after it finished, but nothing really. We can see that we're sort of running out of steam here at the top. We've had the nice push over the course of yesterday, and we had a bit of a spike in volume, but the volume sort of dropping off. We're seeing the candles they're getting a little bit smaller, so maybe we'll have a little pullback, maybe back to this previous this value area high here, the previous value area high, which we broke up out of. If we do come actually back and retest this value area high as support and we bounce off that, then there is a chance that we could see the price come a little bit higher as well. Obviously, we do have that resistance in at $20,700, $800 ish. So we do just have to be aware of that. It is still the price is still within this descending triangle, which is a bearish pattern. So resistance here, we could see a rejection, and then maybe we could come back to that $18,600 level approximately. But yeah, it all depends on what the DXY really does. The DXY has potentially formed that local top, and as I said earlier on, we could potentially come down to form another higher high and then break this local top here and then form another higher high and continue that push towards the upside. And if we do continue that, this bullish price action towards the upside, we are most likely going to see that traditional market and the crypto market dump as well. S&P 500 is at major support right now, another major support level after breaking this major support level here at $3,911 approximately. Got a break towards the downside there, retested that, and then we've come down to this approximate level of $3,660. This is the next sort of major level. And if we do break this level, then the next level I would be looking at is $3,230. That is the sort of next major support that we do have on the S&P 500 from all the way back here in 2020. So yeah, it's not looking too good if we do continue this rise towards the upside on the DXY. But yeah, and the same for Ethereum. Ethereum, I do still have that price target of $1,000 after breaking this rising wedge. The break towards the downside was at $1,830 approximately. Got the retest at approximately $1,875, and then we saw a pretty harsh rejection, finding resistance at $1,780 approximately, then getting a rejection from that level there. And yeah, we come down to 1,220, but I do still have that target of $1,000 approximately, because the bottom of that this rising wedge pattern here is actually at $1,035. So that would be the approximate target, and that target is still in play. So I'd be looking for that for Ethereum. As you can see, we're in a big downtrend as well on this 8-hour chart as well. So we've established maybe a local low at 1,220 for Ethereum. Maybe we could push a little bit higher if Bitcoin pushes a little bit higher as well. Maybe come up to that $1,400 or $1,500 level, forming another lower high, and then we could potentially break this previous low at 1,220 and form the next lower low for Ethereum. So maybe look something like that, coming down to $1,000 approximately, as that target is still in play.
No, you're right. Yeah, you're right there. And I just want to quickly add on to that. So tomorrow, what we can be expecting, not very much news going on, a bit of consumer confidence for the German market. And then we are seeing GDP growth rate from the US the day after. So I think tomorrow will probably be a bit of a normal trading day. I think this might give us a bit of confidence moving in towards those risky assets, also even stocks as well. So this could be, at the beginning, or I should say the early stage of this week, we are seeing a bit of a push in the price of Bitcoin, perhaps because of this. But then I think obviously fear is going to set in for this massive day that we have coming out on the 30th. So guys, this is going to be crazy volatility. My anticipation, I'm going to say, is probably a bit of a normal trading day, maybe a push to the upside, some little bit of relief, maybe indicators reset, but then I expect the dollar to be pumping again, especially the day after tomorrow, in anticipation for, imagine if you're a US investor, now your markets are closed until this event here, until 6 o'clock. And so you've got all of this going on. You'd be like, right, well, hang on a second, let me actually make sure that I've got myself into some pretty safe assets by the end of trading on this day, so that I'm not caught up in any news, because any one of these things would typically be quite a big event. Now we've got bloody like 6 of them all at the same time. So that's one thing just to keep in mind here, guys. But yeah, so I think, maybe a bit of a nice trading day today. Although obviously with all of the central bank talk, I do think that that's going to cast a very big shadow over the likes of cryptocurrencies and will scare some of the institutional investors when they wake up and get ready to trade at around 9:30 New York time. So keep that in mind.
Yeah. Yeah, it's not looking good in the overall market right now, especially with that DXY continuing to push, and the bonds as well. The bonds have had a pretty significant push towards the upside as well, almost coming up to 4%. So,
I mean, if you can get bond yields at 4%, that's not too bad either. That's again something that institutions will be looking at. And if you're buying bonds, you're definitely not buying Bitcoin.
Yeah, exactly.
So there you go. All right, guys. Well, look, thanks for watching, guys. I'm really glad that we got to go through that together and obviously see exactly how that affected the market. But we will see you tomorrow for another video, and I hope you have a great day.
Thank you very much for watching, guys.
Have a good day. See you later.